Meantime, we also got Shivangi Sarda with us and wanted to get in it. As well as Chakri Lokapriya, who is joining in on the show. And Chakri, why don't we start off by getting in your overall take as to what exactly one should be doing in a market such as this? Of course, today is going to be very critical to monitor as to whether or not we continue to see the sell-off that kick-started pretty much yesterday and over the past few days, but was intensified yesterday. What exactly are you advising investors to do? Is it a good time to dip in, and where?
And if you rewind back several decades, when Reagan first became the US president, he said something called Reaganomics, which is build it and they'll come. So India has to build the infrastructure, which is, power, renewable energy, roads, bridges, etc., for foreign investors to come. And, that pace of growth was very good in the last couple of years prior to the election. Post-election, it has slowed down. And partly that explains some of the FI selling. So a good part explains FI selling because earnings have been cut 7-8%. The markets are down nearly 10%, so which means markets are not oversold. So where we would buy then is where, therefore, the earnings cuts will not be there. IT is one area where I think earnings will be revised up because it depends on the US. And second is power, domestic power, whether it's renewable, thermal, the whole power infra area does not depend much on the economy because India is still building. And it's primarily the PSUs, NTPCs, and the power grids of the world. So those are safe areas and where we would invest.
Okay, fair enough. That's the advice on the markets as a whole. But it's also a critical week for the primary markets. We've got a slew of IPOs, and among them being Swiggy, which opens for subscription tomorrow. What is it that you're advising investors? Should they invest in the Swiggy IPO, Chakri?
Swiggy and Zomato both are more or less equal in size. They have more or less equal market share, give or take a few percentage here and there. The only difference is, Swiggy is marginally in the red profit-wise. It's in a loss-making company. And Zomato is just moved to the profit. It's not a big deal profit. It's just a small number. For that 90,000 crore market cap we're talking about, what is important is growth. Both are equal in growth. Swiggy is far cheaper, trading at about 7 times the IPO price, that is 7 times revenue, versus Zomato about 17 times. So yes, Swiggy.
Angi, let's get in your take then, and why don't you break it down for us for Reliance Industries, because that stock shocks languished in trade, attributing to the fall in the overall market as well. Below its 50, 100 and 200 DMA, what's the take on RIL?
Very good morning. So, of course, we've seen that Reliance mirrors the market and, moreover, plays the market. But overall, we've seen that selling pressure has been consistent in this stock from the last 4 months, and we've seen that any bounce have been utilized for selling pressure. We've even broken a crucial support zones on the monthly basis chart. So this pain point is going to be a little more grave here. Now volatility has risen up in the market, and of course we've seen that this space as a whole has not really performed. So I could see there is some sort of more weakness that we could expect here in Reliance, and one should wait and watch and not just rush for bargain buying. So downside, the levels that I'm seeing is around about 1250 zones.
Fair enough. That's the view coming in on Reliance Industries on the charts. Meantime, Chakri, let's get in your take then as to what the outlook is when it comes to the entire auto sector. We did have the festive demand kick in, and that was felt in the October wholesale numbers. What is the sense that you're getting when it comes into the following months? Will that momentum continue? They are hinging on a strong December, but is that what we'll see play out?
And the kind of weak numbers that we saw, the four-wheelers, for instance, Maruti and Hyundai posted its IPO listing, both correct. And now, after the correction, they're trading at, Hyundai is trading at about 18, 19 times, Maruti at about 24 times, 23 times, which is kind of very a decent multiple in line with its growth rates. And both of them are market leaders. Now, and as far as two-wheelers are concerned, TVS and Bajaj still continue to maintain their momentum. So I think, the multiples are not too expensive. It's just that the growth needs to come back. So as long as we see the numbers coming back sometime in December, some indication of that, I think will help. Meanwhile, I don't think there's no need to rush and buy in any of these stocks.
As well from you, Chakri, as to what the outlook is when it comes to a Titan Industries, given that we'll be watching out for Titan as well as Dr. Reddy's, both coming out with their quarterly numbers today. And if we could deep dive into Titan as well, given that, we have seen, of course, the newer categories that are picking up, and we're expecting that profits this time around could be impacted, lower by about 4.2%. How are you looking at the overall demand picking up, the competitive intensity, and the impact of lab-grown diamonds, which they too have acknowledged?
Titan basically, still 80% of the total revenue comes from the jewelry business, Titan from Tanishq and Carrot Lane. And the rest of them are all emerging businesses, and including wearables and all these aspects will eventually get into, and there's some portion of their business will get into lab-grown diamonds. Clearly, it won't come in the Tanishq or Carrot Lane because that would, they're different product categories, and one is an artificial one and one is a real one, can't be sold under the same roof. So that will come under an accessory part of the business, which actually has gone into a different company of the Tata Group, which has gone to Trent. And so as far as the jewelry business is concerned, that with gold prices at a record high, it has shown continued demand from both jewelry in terms of wedding demand as well as discretionary demand. So I think, therefore, the outlook for Titan still looks good, even though the other emerging categories are still very new.
Was to watch out for, and of course among them Swiggy is going to be one of the most talked about ones. We already asked Chakri about his take over there, but speaking of IPOs, Chakri, just wanted to get in your take on some of the other recent listings, the likes of an Ola Electric, because it's been quite a journey for that company. How would you look at an Ola Electric? What is it that you're advising investors?
Ola Electric has the same general issues that the entire auto industry is facing, of a slowdown. In addition to that, as they don't have the same service capability, infrastructure capability, service centers, dealer distribution networks as compared to, let's say, a Bajaj or a TVS Motors. So that's their disadvantage. Second, it's they're new to this whole business of making two-wheelers, and that versus the established players of TVS and Bajaj Auto. So against this whole backdrop, to begin with, the IPO was an expensive IPO valuation-wise. It has corrected. Even after it's corrected, I think still it trades higher multiple than a Bajaj or TVS, so therefore we'll stay away.
Shivangi, what's your sense on State Bank of India? Where is that headed? This is one bank where expectations and the price action has been quite decent.
Yes, Nikunj. So we've seen that, Bank Nifty has not taken that much of a brunt as compared to the overall broader market. And clearly this space is outperforming now from the last one or two odd series. So we've seen that definitely the private banks have been the frontline counters that have moved the index. But now we are seeing action in the PSU names. Some of the stocks are looking quite positive. In fact, SBI was on my cards. Even CUB, for that matter, is quite good. SBI has recently is on the verge of breaking out from an important trend line, and post this, if it manages to hold above 830, then we could see good levels of around 860 over here. So this is next on the cards with a support of 810. So definitely one should, see for buying these stocks.
I understand your view on ABB India, given the fact that the revenue as well as the EBITDA came in as a miss, but there was a strong order momentum, which seemed to have been the silver lining in the numbers. How are you looking at the kind of management outlook as well, which has been fairly positive on capex and infrastructure picking up? Chakri, that was for you.
Oh, okay.
ABB.
Sorry. ABB, I think the good news is basically it's a market leader. The revenues were largely in line. The margins were slightly a miss, but that's all right, given the overall environment that we're in. Product innovation continues to be very, very good. And against this backdrop, infrastructure, it's connected to infrastructure as a segment. So therefore, I think, we would continue to buy ABB.
Chakri, what about valuations? 70, 80 times, what's the trick? When in general there is a slowdown in government capex and private capex is yet to pick up, what's the thought behind buying ABB?
It's a good point, Neeraj. That's one A. It's one of the product innovators in the space in India, and B. Growth is still out there. Yes, growth has slowed down, but the growth is still very intact, and it's what you call reliable growth. Infrastructure spend, whether it is on renewable energy, thermal energy, all this will continue for the next several years. So against that context, even 70, 80 times is in line with its historical multiples. So could pay for it.
What should someone do who's bought into Vodafone? And I can certainly, looking at the data, talk about the fact that this is one stock where the retail presence is significantly higher than institutional presence. Shivangi, Vodafone idea?
Yes, so talking about the telecom space, I believe it's better to look at Bharti Airtel for that matter, because of course this is a much stable stock, and Vodafone Idea has been a little bit of a wealth disruptor of lately, and definitely on the long term charts, Bharti Airtel is a good pick to add on to as compared to Vodafone Idea. But still, I believe there are better sectors to watch out for in this market correction.
Better stocks where you think that you should be a buyer and the conditions are looking ripe for a comeback or a bounce back, Shivangi?
So I believe there is some space left in the exchange related or the brokerage counters. Of course, disclosures applied. There is a lot of activity which is happening exchange related. So BSE, CDSL, these stocks are looking quite positive, and these have held on despite the market volatility. So definitely these are on the cards, and BSE has exactly retraced in the recent setback, and it's made a pullback move from here, now trading at a comfortable level as well. So this is definitely heading out for 4600 immediately, and then positionally 5200 odd levels. So this is one stock which should definitely be in the portfolio. Apart from this, some of the insurance based companies are also looking quite lucrative.
Stay on with us. Meantime, some of these companies?
These companies are going to be, it's quite very tricky for the simple reason that they have a huge amount of inventory with oil prices moving up and down, and therefore impacting the PVC prices up and down. And so the inventory hits and depends also on their hedging policy. So given all this confusion, I think the earnings for this coming quarter is likely to be quite weak. Now, with the new import things, then that'll change the equation a little bit, but I would still wait and watch.
Sharing with us your thoughts on the markets as well as individual stock recommendations. The pre-open rates at the bottom of your screens, and it's a decisively weak start this morning, pretty much taking off after where we left off yesterday. So 1% cut on the pre-open rates. Of course, 9:15 will be the true litmus test as to what the market direction is going to be. But for now, it's clear indications of a weak start. Do remember, the handover as well from Wall Street hasn't been all that encouraging. Asia was a bit of a mixed basket, but we seem to be going in the direction of a little bit of a sell-off. Let's find out what the strategy is when it comes to the mid-cap trading ideas from our chartist. Shivangi, what are you picking out as your top mid-cap call? Shivangi, if you could unmute yourself.
Yes, definitely, quite a bit, filters today. But of course, Dixon is looking quite positive, and we've seen that there has been a good support-based buying, a good quick pullback move that we saw yesterday from its support zones. And after 14,000, we've seen the intensity of buying increasing here. So this is definitely one stock which is looking quite positive. In fact, IT entire pack, we've seen that there has been some sort of recovery despite the market volatility. So 15,000 is next on the cards for Dixon. So this is the target that you can buy for, with a support of 14,150 level.
Let's find out what your mid-cap trade
headed. Mahindra & Mahindra yesterday had a decent day. Maruti seems to be going the other way around. Tata Motors has corrected quite a bit from the recent high. Do you think auto stocks have a rough road ahead?
So, auto stocks have taken a dampened hit right before the festivity even kicked in, and we have seen that there has not been much of a recovery, although M&M has been one of the strongest in the entire pack. So, my of course, bets are on the this chart M&M as well. But overall, there is no tailwind from the entire sector, so it might get a little tricky to enter here. But of course, the next targets that we're looking for M&M is round about 3,000 odd levels.
M&M 3-month charge.
If you like this video, then like, share and subscribe to ET Now.